Thank you, everyone, for coming online. Today, it's myself and Nish. Kyle is unable to attend because his internet is down in his building and he's dealing with a fire in his building. So we will continue on. So as always, we like to start. And again, what's awesome is when you'll see in this presentation how we start our webinars and we talk about ourselves quickly and then show our portfolios and show the value of owning real estate over time. It's going to show that in the presentation. So I get giddy when I get to show like, hey, here's how you can build wealth over time. So I'm owner and broker record Remax Wealth Builders Real Estate, been selling real estate in Toronto for over 15 years. Number 1 Remax agent in Canada, individual transactions 2022. Number 11 Remax agent worldwide 2022. Been inducted into the Remax Hall of Fame, awarded the Remax Lifetime Achievement Award at 35, awarded Remax Circle Legends, that was at 40. But more importantly, I've had a very successful investment career. I've turned a $39,300 deposit into a $17 million real estate portfolio, including 15 condos, a Hyatt Park triplex, and an apartment building in Hamilton. And here is everything I have. Now, if you look at the current market value of the portfolio, we're looking at a value of just over $17 million. But that's all those properties are with mortgages. And so if I were to sell, I would not have $17 million and various taxes I have to pay and everything like that. But if I wait for 30 years, all those properties are going to be paid off. Why are those properties going to be paid off? Well, there's tenants living in all of these properties. And while the tenants are in these properties, they're paying down the mortgage for me. And in 30 years, because that's the amortization of a mortgage, all the mortgage will be paid off. And then if I just factor in a conservative 3% compounded annual growth rate, my portfolio net will be worth $42 million in 30 years because it's fully paid off and it's gone up in value. So that is the true value of holding real estate over time, the accumulation of wealth. Now, if I were to sell early, I wouldn't have the opportunity to make this money. And why do I use 3% compounded annual? Nice conservative number. Because we see ups and downs. And right now we're in a down in the Toronto market. And that's when you buy. You buy when things are down. And I'm going to show you that the math works on this. So there's also Kyle. Kyle unable to be with us today, but he is a wealth builder on the team. He has his own $4 million real estate portfolio consisting of 6 properties. And then Nish, our other wealth builder, I'll let you introduce yourself. Oh, that's Kyle's portfolio. Sorry. Now I'll let Nish introduce yourself. Nish, why don't you let the crew know a little more about yourself for those that don't know yet.
Yeah, fantastic. Thanks, Alex. So I started my real estate journey back in November of 2020, 3 years ago. Since I started, my success rate has been proportionate to the amount of time I've spent with Alex and Kyle, learning the ropes about investing and realizing that getting real estate and buying real estate isn't simply a place where you can live, but also a way to fund your future retirement to ensure financial freedom and wealth for my family and generationally down the road. Currently, there's a total of 9 properties in my portfolio. A few of those I have a financial interest in with other family members. And the 7 most recent properties that were purchased were in Calgary, also because of the price points, and it kind of tie into buying low, as Alex alluded to. I have been selling properties in Calgary as well for a couple of years, and have sold, over 165 properties since I started out there, along with my existing resale business in the Greater Toronto area. Prior to my time as a realtor, I worked for a company for 22 years. Now, we were unfortunately impacted significantly by COVID, where the business had to stop. And everything that I relied on from a future financial health component, like the investments that I made with the company, all the contributions, all those things kind of disappeared. So tying that back into the investment side of real estate, I'm extremely fortunate to have partnered up with the right people in order to make sure that I wasn't in a negative financial state today and also for the future. The property that I own, for full transparency, we can flip over to that slide. Currently, there are 9 in this portfolio. And as I mentioned, the last 7 were in Calgary. Today's worth or net worth of those properties are just over $5 million. And also adding the 3% year-over-year appreciation in 30 years, using the same formula Alex used, it'll be worth just under $12.5 million.
So these numbers may seem big, and we preach buy and hold real estate over time. But if you just start small, you can see the huge financial impact that you can have for yourself in the future and your family in the future. So even with a $1 million real estate portfolio, in Toronto, that's maybe 1.5 condos. In Calgary, that's like 3 condos or 2 detached houses, no, not detached houses, two row houses or something along those lines. But with a portfolio of $1 million, the value of that portfolio would be worth over 2.4 million in 30 years. But what's cool, if I then index that to inflation, I can calculate for you what your return on your yearly payout can be in today's purchasing power. So what I mean by that is the equivalent, your purchasing power today will then be what it'll be in 30 years. So if you have $1 million real estate portfolio in 30 years, it'll be paid off. And then at a 5% rate of return, you could pay yourself $70,000 a year from that real estate portfolio. That's your pension fund. You just built your own pension fund. Now I do the recommended yearly payout at 42,000 because that's at a 3% rate of return. So that now you have that generational wealth component going. You're not losing value in the real estate portfolio. You can only pay yourself out 3% per year. And again, that's $42,000 per year if you have $1 million worth of real estate today, and that's levered real estate. So really a $1 million real estate portfolio today means you have $200,000 in there. That's an 80% loan to value. But then it goes up 1 million, 2 million, 3 million, 4 million. Again, I've done it. Nisha's done it. Kyle's done it. You can all do this as well. And the value of doing this is you're securing your own financial future. You're not relying on someone else to make investments on your behalf. And you also know you're investing in a physical asset. You know that roof will be existing in 30 years versus if I'm investing in a company, I don't know if that company is going to be around in 30 years. So it's really you're investing in roofs overhead. You provide a roof over someone's head, and then someone gives you a monthly rent to cover the mortgage expense, the property tax, and the maintenance fees on the property. And in 30 years, you got a nice little retirement fund for yourself that you built. So that's why you buy and hold real estate. Now let's show you what it means in practice. So how to profit from a condo downturn. We are full out in a condo downturn. Well, we're in condos. I focus on condos because they're concrete boxes in the sky. You can apply this to any form of real estate. But the condo is the easiest form of real estate for you to manage. And our investors really like a hands-off approach. And that's what the condo allows you to do. It's a concrete box in the sky. What does that mean? That means the exterior of the property is managed by the condo management in the building. The common areas are managed by condo management in the building. The land that the building is on, that's managed by condo management in the building. These aren't issues you have to deal with. The only things you have to deal with are what's in your 4 walls, which is generally just appliances. When you start getting to other properties, which I also own as well. I own multiplexes, I own apartment buildings, I own commercial with retail. And I think if you're on the chit chat before this, I talked about my power going out in our office building. That's because there's still a fuse box in the office building, and I turn a space heater on because the heat isn't great in the building. And then the space heater blew the fuse, and I went down there to change the fuse, and then I almost electrocuted myself while I'm down there. And now I have to replace the whole panel to bring it up to a breaker level, so I'm not almost electrocuting myself, and that's going to be 10,000 plus. Could be more once we get into the walls and all that kind of stuff. Why did I?
Hey, Alex, guess what?
Yeah.
I don't have any of those issues.
Yeah, you don't have any of those issues, and that's why I'm going on this ramble. You can make money in real estate different ways, but I'm dealing with those issues now. Our office is located in that building. I'm not paying rent to someone else to that space. So I didn't buy this building as as an investment to make money off of. I bought the building for me to operate out of, because I didn't want to pay rent to someone else. That's essentially why, and I'll make money from it anyways. But that's why I'm going through the hex and that. Why am I going down this tangent? Because Kyle's not here to stop me. Hi, Kyle. Oh, he's not even on, so I guess he'll see the recording of this. Kyle, you're not here to stop me. Anyways, let's talk about how to profit from a condo downturn. You guys can see that I'm giddy and I'm excited, and this is just from what I uncovered here. And I'm excited when we can show people how to make money, and it's in a relative short period as well. And that's what's really exciting. So the one thing I want to show everyone is you never lose money in real estate. You never lose money in real estate unless you sell. People have watched before. You've heard me say this. Therefore, never put yourself in a situation where you have to sell. If you don't have to sell, you're not going to lose money. And then those beautiful slides we showed at the beginning, owning real estate over 30 years, you'll be able to accomplish that. Now, why are people selling right now? Well, they're under pressure. So this is investors. Mortgages are renewing and properties have turned cash flow negative for investors. And I'm going to show you an example from my portfolio, something that is severely cash flow negative. And I'm actually subsidizing. So I'm not even covering my principal payback. That's coming from money out of my pocket. Also, people are selling because they have upcoming closings on future projects and they require capital to close on these projects. So we have a flood of units coming on the market because investors their renewals are coming up and they're like, well, I just jumped my renewals, they're not even the 1% to 2% renewals. A 3% mortgage that I signed in 2019, those are jumping up to 6% now. So investors are under pressure. So they're like, well, you know what, I'm going to sell. Now they have equity in their properties. Are they getting peak pricing? No. But there is equity in their properties and they need to liquidate because they can't afford the monthly drain on the cash flow, or B, they're scared and they want to sell and they don't want that negative. They're like, I'll just take my chips off the table now. But they put themselves in a situation where they have to need to sell, and they're going to lose potential upside in the property or lose money in general. So let me show you what is happening today. Property from my portfolio. If you go to the first slide, this is 2A Church, unit 2406, a 1-bedroom and den. This is right downtown Toronto. The mortgage amount on that is $400,000. There's a variable rate mortgage on that. It's at 6.67%. So my monthly mortgage on that is nearly $2,600. When I factor my maintenance fee and my property tax, my monthly carrying cost on that is over $3,000, over $3,100, inching up to $3,200. The current rent on the property is only $2,400. So that means my current cash flow is negative $761 per month. My monthly principal payback is $359, but when I factor in my current cash flow and my monthly principal payback, I'm out $402 a month. I'm still out. I'm paying down the mortgage on the property, not the tenant. I'm paying down the mortgage now. So that means I'm subsidizing the person living in there by $402 per month, because it's me paying down the mortgage, not the tenant. So that means this year, cash flow out of pocket, nearly $9,000 negative. And the equity pay down, that subsidy of $402 per month, that's what I'm subsidizing the property. Now, there are people out there that can't afford $9,132 per month. So let's say they had the mortgage increase or renew on their principal residence, and then they have their investment property. Maybe they have a few other investment properties. This negative cash flow starts to add up for them. They just can't afford to do it, and they're listing their property up for sale. That's what's happening today. People are seeing these numbers. They're like, I can't do this. I can't afford to do this. Sell, sell, sell. Hit the panic button. Sell, sell, sell. So what would I be selling for this for today? The last sale of a similar unit, same building, same layout, $570. And that was in September. Market is worse since September. Realistic selling price today, if you were to call me up and you're like, Alex, I want to sell the property, I need to get rid of it. What do I need to list it for? I'd be like, you need to sell it for $550,000. I'm like, that's our sales price. Now, the conversations I have with investors or people selling these days, I'm like, there's two people that are selling properties. There's people that want to sell a property, and there's people that need to sell a property. I'm like, which category are you in? A person that wants to sell a property has a price that they're willing to accept. And if it goes below that price, they're not going to sell it. And they're just going to, if an investor, they're just going to absorb that negative cash flow on the monthly basis. It's like, Alex, I'm not going below that. I don't need to sell. I can absorb this. I'd really like to sell, but I don't need to. So I want to sell, but I'm not going to sell below this price. A person that needs to sell is like, Alex, I need to get rid of this property by this date. Otherwise, I'm in trouble. That's the need to sell component. So again, if you were telling me, you're like, Alex, I need/want to sell this property, or Alex, I want to sell this property, what would I have to sell the property for? I'm like, $550,000. So we got to sell it for. And then it's up to them if they're in need or want to sell situation. So what happens in 18 months? This is how we profit. So you saw what the numbers were. I was negative in cash flow. I was negative in principal payback. Looked terrible for me. But if I wait 18 months, this brings me to May 2025. My mortgage goes from that over 2,500, and it goes 2,578, and it drops down to 1,910. So now my mortgage plus my maintenance fee plus my property tax, my monthly cost is $2,489. Current rent on the property, $2,550 per month. That's actually the market rent on the property right now. I'm in existing lease. I can't increase the rent currently at this time. So that's why the numbers are $2,400 on the unit right now. But the market value is $2,550. Because this building is built after November 15th, 2018, and that's the type of buildings we want to target that aren't rent controlled, I have the ability to increase that to $2,550. And definitely be increased by to $2,550 when May 2025 comes. So I'm at $2,550. I'm now positive cash flow. I'm at $61 per month. Monthly principal payback, $587. So my cash flow plus my monthly principal payback, tenants paying down my mortgage again for me, that's good. That's $648. Now, what has changed? What has made this look terrible to be in a good situation again? Well, interest rates have dropped down to 4% by spring 2025. That's the 18 months from now till 2025. My cash flow in pocket for the year is 730. Oh, that number's wrong. That's 732. No, that's not 732. Cash flow in, no, that's right. 732, sorry. So cash flow in pocket for the year is $732, just to figure out what I was doing with that number. So 61 times 12. And the equity pay down per month is $587. And again, the tenant is paying down my mortgage for me. What a reversal of situations. Now, I want to add, when you hear the government say that interest rates won't go down to the low levels of the pre-pandemic, I signed mortgages in January 2020, and my fixed rate mortgage at the time was 3.04%. I could actually gotten less than that, but because I'm rental properties and everything, there's premiums on top of that. So you would have been in the high twos signing mortgages in January 2020. And those are fixed rate, 5-year fixed rate mortgages. So the variable rates were even lower at that time. I'm calculating this at a 4% variable interest rate. 4% variable interest rate. And if we look at predictions, you're looking at seeing that will be in that range come May 2025. So now I've went from a cash flow negative situation to a cash flow positive situation in only 18 months. Now, what happens to the value of the property? Well, again, if I had to sell the property today for you, I'm like, you're gonna sell it for $550,000. I'm like, that's your need to sell, get it out there, that kind of thing. The market is ice cold right now. The buyers are in hibernation. We're barely getting showings on our listing. That means it's a great time for you to buy. You're at the bottom. We're circling around at the bottom. You never time perfectly in the bottom, but we're circling around the bottom. And I've seen this before in previous years. Now, my window is probably a little larger than other windows. My other windows have been about 6 weeks you know, we probably have a few months right now, but we're circling around in the bottom, November, December, January, circling around in the bottom. And I'll show you why I know this in some future slides. But if I look at what my mortgage payments are today, 2,573 at a 6.6% mortgage, 6.67% mortgage. In 18 months, if I have the exact same mortgage payment, 2,578, that means my mortgage amount is $540,000. That means my value, if I'm putting 80% down, is $675,000. So if people are willing to make those types of payments today to buy something for $550,000, that means in 18 months, they'll be willing to pay $675,000 when interest rates are 4%. What does that mean? Well, that's a gain of $125,000. That's you profiting off the condo market downturn. And guess what? The numbers are going to be even better than this, because let's say you're buying for $550,000 now, and you're only putting 20% down. Your mortgage would actually be $440,000, which then would make this mortgage number higher, which if that mortgage number is higher, that monthly mortgage amount is higher, then that means that this number can go higher as well, which then would push this number up, and then that will push this number over 700,000. But I wanted to keep it nice and easy, and I wanted to relate it right back to my own portfolio, because we like to show people how we do things and how we have our money and show real life examples. So let's keep it nice and conservative. But if I use the context of this example, this number would actually be higher. But let's say 675, a gain of 125. But realistically, you have that gain could go over 150,000, because this value will most likely be over 700,000 at that time. So let's look at future supply. Well, guess what? Our future supply isn't adequate for our growing needs. So with these higher interest rates, it's really slammed the brakes on new construction developments. Now, why does that slam the brakes on new construction developments? How these buildings get built is that you need to pre-sell 75 to 80% of the building before banks will give you construction financing to build the building. So are those buildings selling right now? No, they're not, because people have put the brakes on investing in pre-construction product. And we are in our lowest levels in 10 years. And we're 50% below the 10-year average for sales. 50% below the 10-year average for sales for new construction properties. What does that mean? Projects are getting canceled, and builders are shelving projects until future dates from when they'll be successful, when they'll be able to have successful launches. So what does this mean? Well, these buildings, typically from sale to completion, is about a 5-year process. Well, if there's no sales happening right now, that means my future supply come the next 5 years is going to be constrained. So I actually have supply issues that are going to be happening in 5 years because I'm not selling product today. And the builders aren't going to build the product. You want to know why? Because builders aren't in the business of losing money. So they wouldn't be able to get construction financing because banks aren't in the business of losing money. So you won't see buildings being built. If you don't see buildings being built, you're not going to have you're not going to have new roofs over heads that you require to build for all these people that are moving to Canada. And that's where you see that there's a lag time between new condo pre-sales and construction starts. And that's going to, if you look at the future, because we're always looking at the future. If you watch our Calgary presentation, we're talking about 20 years, what the population is going to be. Well, if we have a lag today with no sales, then that's going to impact the future. And that's going to lead to outsized growth in people that own real estate in those lag years, because there's no new buildings being built or coming to completion, because you didn't have sales for a year period between, realistically, July 2023 to July 2024. So you'll have a 1 year gap of constrained supply that was supposed to come to market and didn't come to market. So what does that mean? Well, let's look at the future demand. Well, guess what? Immigration, we've been flying. We're record levels of immigration, and it's not stopping. It's not stopping. So for 2024, 2025, we're going to do our planned increases of 485 and 500,000 as planned, and we're still doing another 500,000 in 2026. So we have record levels of immigration in the past, and we're having record levels of immigration moving forward as well for the next 3 years. Well, on top of that, we're at record low sales right now in Toronto. So we are in the lowest sales in 28 years in Toronto. We are down to 1996 levels in Toronto. So it is ice cold out there. People are just not transacting in real estate. What does that mean for you? Well, so first of all, from the immigration side, we've had record levels of immigration for the past 3 years. New Canadians rent for the first 1 to 2 years, and then they buy. So right now they're renting. They just arrived, they're renting. But in 1 to 2 years, they're going to stop renting and they're going to buy. Why are they going to buy? They came to Canada for better opportunity for their families, for themselves, and they want to establish themselves. So they are in a race to do that. Any new Canadian is diligently saving. They don't want to pay rent. They want to own. They don't want to own 1 property. They want to own 3 properties, 4 properties, 5 properties. They want to invest in real estate. And they want to build their portfolio. Niche, you're a new Canadian, right? Was your family motivated to buy real estate as soon as they could?
Absolutely. Yeah, we that was definitely a goal. Within 2 years, back in the early 90s, we were able to buy a property.
2 years.
100%.
Yeah.
Yeah.
Like that is what you strive to. You know, you come here, you rent for 2 years, then you buy, you control your destiny, you build equity, then you build your real estate portfolio. So that's phase 1. Record levels of immigration have been happening for the last 2 to 3 years, and we're going to continue that for the next 3 years beyond that. Okay. Huge demand, but we just show we're going to have constrained supply. So we have constrained supply coming on market because we're not hitting pre-construction numbers. So supply is going to go down for a new product going down, but demand is going to go up. And on top of that, we're at record low sales right now. So then you get a pent-up demand as well. First-time buyers, that's your new Canadian side. What about all those first-time buyers, that generationally, those millennials now that want to buy? And shoot, I mean, what's after millennials? Generation Z, I think.
Gen Zs, maybe.
Yeah. So they're all going to be buying as well. They're all on the sidelines right now, waiting. 2 reasons they're on the sidelines. Number 1, they're scared about interest rates, so they want to see interest rates start going down. And 2, with current interest rate levels, they can't get approved. So once things start getting down, they'll start getting approved. They have more savings being built up. So you have these 2 huge demographics: the first-time buyers, which aren't buying right now, and then all the new Canadians, record levels of immigration coming in online. When does that hit? 2025. 2025, you have both these demographics that are going to be rushing into the market. Interest rates are going down. New Canadians have hit their 1 to 2 year points when they're in Canada. They want to start buying. Prices will skyrocket in 2025. The math is just right there for everyone to see. That's my passion. I was like, oh my God, like, I know we kind of talk about this kind of thing, but when you sit there, write things out, do your research, this is absolutely 100% going to happen. And we've talked about this stuff in the past. When we started selling real estate in Calgary in 2019, I think no one was buying Calgary real estate in 2019. And I said, just look at the numbers. Look at the numbers. This is going to go up. And the Calgary real estate is going up. One of the only markets in Canada that's going up. And it has long legs as well to go up because it's affordable. Its values, yeah, values are up, but it still has a long way to go up. And why will be people investing in Calgary? Well, even with my numbers here, Toronto is an expensive city, and there's the taxes and everything like that. And it's still difficult for the mom and pop investor to invest in Toronto. So they're going to Calgary, and there's still affordability going in Calgary. But there is opportunity in Toronto right now if you have those funds to invest. So just imagine now what's going to happen in Calgary, which is down here, and this applies in Calgary. This applies in major centers. This applies in Vancouver. It applies in Vancouver. It applies in Calgary, and it applies in Toronto. You're going to see big things happen in 2025. So you buy when the market's down, and then you're going to profit.
And Alex, I'm seeing that in real time right now with the clients that we have as buyer clients. We are getting significant deals on properties like, a 5-10% savings versus what the prices were just a year ago. It's astonishing.
Niche. We are wealth builders. We want to build your wealth. We have two taglines. We want to build your wealth. This is our tagline. We want to maximize your wealth and minimize your stress. So guess what? If you're a buyer right now, you get to negotiate. And we just had a great negotiation. We're hopefully finalizing on that deal soon, and the buyers got to negotiate. Took longer. Is your deal going to get done tomorrow? No, you got to be patient. But there's opportunity out there to negotiate and get a deal done, especially if you get the property from someone that needs to sell. And when you look at the numbers, you just look at the numbers. May 2025, you'll be able to go back here and look at my presentation and go, Alex was right. Alex was right. And I've been right a lot in the last 15 years. I'll be right again in 2025, in 18 months.
I have one more tagline that one of my clients shared with me yesterday that I think is quite relevant. You buy the property, but you date the interest rates.
Yeah.
You can put that interest rate on the side when you want to and get a better one.
And go do your own research online. Like, this is going to happen. Rates will go down. I'm saying 4%. You'll be able to get variable rate mortgages for 4% by May 2025. And if you just align then the mortgage payments today that people are willing to pay with mortgage rates and the value in 2025, that'll equate to your increase. And that specific example in 2A Church, where I own a property, and there's the sales data. I'm not saying you can get one for $550, but I'm saying that's the sales price, the sell price. If you were to go to the market, probably that's what you get for $550, and it'll be worth $675, most likely over $700, because if I did a more detailed math on it, but let's say $675 just to be conservative, like conservative numbers, $125,000 gain, 18 months. That's how you profit on the condo downturn. So let's open up the floor to questions. If you have any questions, I'm sure you do. If not, or you don't want to ask questions on here, there's an opportunity to book calls with the wealth builders, and we can go over this, whether you're interested in profiting off the downturn in Toronto or profiting. It is an upswing now in Calgary, but it's been a downturn for 10 years, over 10 years down there, and profiting on the upside in Calgary. We can answer these questions for you. So if you have any questions, you can ask it in the Q&A box down below. Someone has
there was one question that came up earlier, Alex, and the question was, this individual would like to buy a condo, but seeing that some condo fees are between the ranges of $500 to $600 a month, they're struggling to understand the math, especially after all the additional carrying costs. You're looking at an additional $1,000 on top of the mortgage. So if you could speak a little bit to the condo fees and actually what they cover, and also finding the right property. A lot of those fees are mitigated, where in a freehold property or something else, you're paying that anyways. You just don't see it in a consistent way every month.
Yeah. So great question. And we get that question a lot. So first of all, you will not be cash flow positive right now. You'll be cash flow negative. Given my scenario beginning, if you're paying a 6.67% interest rate, you're going to be negative. You're not going to cover if you put 20% down. Now you can put more money down to make that cash flow positive, but you will not be cash flow positive right now. Absolutely not. It's not possible right now, unless you put more than 20% down. So I just wanted to clarify that to everyone. But if you put 30 or 40%, you're probably looking at around 40% down to make that cash flow positive. I have to work out the math.
And that's in the GTA we're talking about
That's in the
specifically.
GTA, yes. In Calgary, but 20% down and be cash flow positive. But if you want to take advantage of the downturn in the GTA and the quick upswing, either you take the negative cash flow for 18 months, or you just put more money down and make it not cash, make it positive cash flow. The beautiful thing is, and we don't talk about this a lot, and I learned this one from Brad J. Lamb. Anything can cash flow. You just got to put more money down. Now we're just used to saying 20% down. Now I'll tell people the story. I was down in the US a number of years ago when I was talking to someone from New York and someone from Miami. And I spoke to them because it was at a real estate conference, because they have markets similar to ours in that they have high rise. A lot of the American markets, they don't have high rise buildings. But in New York and Miami, you're most likely living in a high rise. And I talked at that time how with 20% down, you could be cash flow positive in Toronto. And they laughed at me. I'm like, well, what about you guys? Like, what percentage you need to be down? So if I was in New York or Miami, even at 50% down, I wouldn't cash flow. So it's all about what you put down and relative to that, how you want to see the cash flow on a property. So I just wanted to add that to people. But you'll make $125,000 or more if you were to purchase the right property today at the right price. That, again, talk to us. We'll guide you to the right property. Can't say every property is going to go up that much, but if you buy the right property in the right location and the right layout and all that kind of stuff, you'll make over 100,000. Now, a big roundabout maintenance fees. Let's go to my preamble. So my preamble, I was talking about how I got to spend $10,000 plus on my building. Hopefully only 10,000, could be 20, could be $30,000. Why could I go from 10 to 20 to 30? Well, I gotta replace the breaker box in the basement. I gotta replace it from fuses to breakers. And then I gotta sell another box upstairs. But if they find a surprise in the walls, and I got to redo all the wiring in the building, that will go to $20,000 to $30,000. Okay. When you look at a freehold property, you may not have a monthly maintenance fee, but if you go and calculate your expenses over the year at a property, it will equal a maintenance fee. When you factor in snow removal, when you factor in landscaping costs, when you factor in repairs to your property, when you factor in all those extra costs on a yearly basis, maybe you want to look at over 3 years, because maybe 1 year you won't have that major expense, but I can guarantee you will have a major expense over the next 3 years, and that will cost you $5,000 to $10,000. And that $5,000 to $10,000, when you break it down on a monthly level, you start getting a lot closer to that monthly maintenance fee. The thing is, people just see that $500 go out their bank account every month. They're like, what is my money going for? Well, it's going for all the things that you don't have to deal with, that you would have to deal with on a freehold property. That's what your maintenance fee is. It's just a convenient monthly payment to cover the management of the property, all the exterior work on the property, all the repairs you have to do in the property. You don't have any of those expenses when you have a condo, for the most part. Yeah, if an appliance goes, you got to pay for that repair. In a freehold property, major expenses. My apartment building in Hamilton, we just got a $40,000 bill. Guess what that was for? We have bat issues. There's bats, and we got to spend $40,000 in the exterior of the building to bat proof the building. This is real. There's bats in the building, and the only way to get rid of it is to spend $40,000 to fix the building so bats can't get in the building anymore. If you were in a condo building, you wouldn't have a bat issue. But I have an apartment building, and now I have a bat issue in the apartment building. These are the things that come up when you own multiplexes of freehold properties. So that's what maintenance fees are. I noticed some other hands up. Oh, the Q&A. Okay, so the Q&A is lighting up now. Okay, here we go. Yeah, this is I'm in the negative $1,900 per month right now. They bought a pre-con in early 2020 and took possession last year. Tried to sell it off to break even. Not one showing. Now their units are listed for 100,000 less than me. Values are dropping. What would you suggest? You buy and hold. Buy and hold. Like either you take $100,000 loss right now, or you wait until 2025. Your value will improve, and you'll probably make a gain on the property. You're just gonna be taking that negative $1,900 per month loss right now. And that's what people are doing. That's what people are experiencing right now. So you could sell it, but right now you're going to lose. So you're better off holding on the property. The line in real estate right now for investors is survive to 25. Survive to 25. If you survive to 25, you'll be okay. But if you sell right now, you're going to take a loss. So you just buy and hold. Don't panic sell. That's how you lose money. If you look at the math that I showed today, you're going to be okay in 2025. It's going to hurt for the next 18 months. Not even 18 months. It's going to hurt for the next, I would say, 12 months. In 12 months, it's going to start getting better. In 18 months, you'll be in a good place. It's just going to hurt for the next 6 to 8 months, and then it's going to start improving. Thanks for the answer. So it would not be better to get a house with more bedrooms, if possible, to purchase for a similar price, especially if house hacking. Okay. Then someone. Okay, so I'll just address Tyler quickly. Tyler, Niche will send you an email. We did a webinar last week on Calgary versus Edmonton, and why the upsides in Calgary over Edmonton. Calgary is going to do better than Edmonton over the long run. We got a whole presentation on that. So I would say you're far better off investing in Calgary over Edmonton, but Niche will send you that webinar on that, and then you can book a call with him and he can tell you why. But basically, I'm not going to get into it right now, but Niche will book you a call and tell you why you should invest in Calgary over Edmonton. Okay, so do you invest in Edmonton? No, you don't invest in Edmonton. Sorry, another Edmonton question. We got a whole webinar on that about Edmonton. Calgary over Edmonton. Thoughts on Calgary versus Edmonton market? Okay, yeah. We have a whole web. I think it's on our YouTube channel now. It's on our webpage too, most likely. If not, it will be by tomorrow. If not, but it's on our YouTube channel. The webinar on Calgary versus Edmonton. But in regards to the assignment market opportunities in Calgary versus the assignment market opportunities in Toronto, there isn't really any great assignment opportunities in Calgary. You're better off just going right into the new development market right there. People are able to close on their properties in Calgary. Webinars on our channels and our website. So Calgary versus Edmonton, we got a whole video on that. It's on our website. You can check that out, remaxwealth.com, remaxwealth.com. Any other questions anyone may have, we're happy to answer those, but otherwise, we will wrap this up now. You'll have an opportunity to book a call with a wealth builder if you want to learn about where you should be investing if you want to profit off the downturn in Toronto, or why you should be investing in Calgary versus a market like Edmonton. We can handle those conversations as well, but we're here to educate and advise you. And I'll tell you, you'll make big money if you buy the downturn in Toronto. If you can afford it, right? Don't put yourself in a situation where you have to sell. If you're like, I can't afford the negative loss, or I can't afford the negative cash flow in Toronto, or I can't afford a large down payment to offset that, then don't buy in Toronto. Then you're going to buy in Calgary. You can get positive cash flow for 20%. Actually, next week our webinar is profit off the downturn of Toronto or invest in Calgary, and we're going to compare the two and just show you the differences. The people that are buying in Calgary are different than the people that are buying in Toronto. There's arguments to do both. So thanks everyone for coming on. Can't wait to see you next week. Hope to continue to educate you, and we look forward to your calls and booking calls with this week. Okay, everyone. Talk soon.
Thanks, everyone. Have a wonderful week. Ciao.